Eli Lilly just smashed through earnings estimates, and it's sparking a revolution in how we think about weight loss and diabetes treatment. Want to know why? Imagine a pharmaceutical powerhouse not just meeting the market's lofty expectations, but blasting right past them, all while its stock soars. That's exactly what happened with Eli Lilly on Thursday, as the company unveiled third-quarter results that left analysts scrambling to catch up. Picture this. A sleek sign bearing the Eli Lilly logo proudly displayed outside their Indianapolis headquarters on March 17, 2024, signaling a company on the rise. Eli Lilly's shares jumped a solid 5% in pre-market trading that day, thanks to blockbuster performances from their weight loss drug Zepbound and diabetes medication Mounjaro. These aren't just any drugs. They're part of a cutting-edge class called GLP-1 receptor agonists, which work by mimicking a hormone and helps regulate blood sugar and appetite. For beginners, think of it like a natural signal in your body that tells you when you're full. These medications amplify that signal to make managing weight and diabetes easier. And the demand? It's booming, with people from all walks of life turning to them for life-changing results. But here's where it gets controversial. Is this pharmaceutical success story coming at too high a cost to society? The company has now upped its full-year revenue forecast for fiscal 2025 to a range between $63 billion and $63.5 billion, a significant boost from their previous outlook of $60 billion to $62 billion. On the profit side, Eli Lilly expects adjusted earnings per share to land between $23 and $23.70, climbing from the earlier prediction of $21.75 to $23 per share. Diving into the specifics, Mounjaro generated an impressive $6.52 billion in revenue during the quarter, a whopping 109% increase compared to the same period last year. That's way above the $5.51 billion Wall Street had penciled in, according to estimates from Street Account. And for Zepbound, which hit the market about 2 years ago, the quarter brought in $3.57 billion, marking a staggering 184% year-over-year jump, and edging just past the $3.5 billion analysts anticipated. To put it all in perspective, here's a breakdown of Eli Lilly's third-quarter performance versus what experts were forecasting, based on a survey of analysts by LSEG. Adjusted earnings per share, 7.02, surpassing the expected 5.69 products. Total revenue, $17.60 billion, outpacing the anticipated $16.1 billion. These eye-popping figures highlight Eli Lilly's fierce battle to stay ahead in the competitive world of GLP-1 drugs, where they're locking horns with rivals like Novo Nordisk. It's a market that's exploding, with more people than ever seeking solutions for obesity and diabetes. But, and this is the part most people miss, critics argue that the high price tags on these medications could be limiting access for those who need them most, raising questions about whether we're prioritizing profits over public health. This story is still unfolding, so keep an eye out for more updates. In the meantime, what are your thoughts? Do you see Eli Lilly's success as a triumph of innovation or a sign of deeper issues in healthcare affordability? Is the focus on weight loss drugs addressing root causes or just treating symptoms? Share your opinions, agreements, or disagreements in the comments. We'd love to hear from you.